Are ETFs and index funds better investments for buying individual stocks? It's an important question because the answer will fundamentally change the shape of our portfolios over many decades. Media and investment analysts often push individual stocks because they're seen as more glamorous and far more exciting. After all, a 25% crash in a stock in one day is far more newsworthy than a 0.8% drop in the market. They talk in terms of regular trading too, telling you that you can beat the market by buying low and selling high.
But we say differently. Our investing motto is to buy and hold for the long term, investing regularly and often so that you smooth out the highs and the lows of the market for long-term wealth creation. This is something anyone can do, and investing in your future is now more important than ever before as the post-crash world has torn away so many of the safety nets our parents' generation enjoyed.
But how do we do this? What is the vehicle that we use to invest in the stock market? It's called an ETF. And today we ask, are ETFs better than stocks? Let's check it out.
Welcome to moneyandshackled.com, the investment channel and website that sets you and your finances free. I'm Andy, this is Ben, and if you like what we say, hit the like button and click subscribe.
Also, on moneyandshackled.com, there's a ton of investment articles on there that you can read while you're bored at work. And we have hundreds of pounds of welcome bonuses that you can snap up if you sign up to one of the investment platforms listed on the offers page. The link is in the description below. Let's get into the video. Why ETFs are so awesome. Number 1. Easy to buy and understand. An ETF is traded just like a stock. Here is the Trading 212 app, which lets you buy shares and ETFs at the click of a button. Here's me buying a FTSE 100 ETF. An ETF tracks an index or market such as the FTSE 100 and the FTSE 250 in the UK and the S&P 500 in the US. If the UK stock market goes up and you have bought into a FTSE 100 ETF, then your FTSE 100 ETF will likewise go up. Want to check how your portfolio is performing? If you've bought a few different ETFs, your portfolio is likely mimicking the world economy as a whole. It's just dead simple. You can even track the entire world market with the right ETF.
Number 2, ETFs don't run to zero. Because ETFs track markets, they are very unlikely ever to run to zero. A share or a portfolio of shares could lose all their value overnight if the company that those shares are in goes bust. Maybe you own shares in Enron before it collapsed, or any number of businesses that are now consigned to the history books. Your investment would have disappeared forever. While a whole world market could lose some of its value in a crash, maybe up to half of it, as long as the world continues to spin, it won't go anywhere close to zero.
Number 3. ETFs are cheaper as fewer fees. Most stock market investment platforms charge a fortune to buy and sell shares in your portfolio, which regularly needs to be rebalanced, whereas it is much cheaper to build a portfolio from ETFs. At Money Unshackled, we are forever banging the drum that fees are the number 1 killer of a portfolio's value over the long term.
Thankfully, the dawn of free trading apps such as Trading 212 and Freetrade have made it possible to buy and sell stocks and ETFs for free. Although, the available range is much smaller on the free apps when compared to the mighty premium websites such as Interactive Investor, although they charge a fee.
Number 4. Tracking an index saves you time. As business owners and investors with our fingers in a lot of pies, our time is precious. Managing a complicated shares portfolio is more time consuming than you would think, as you need to be constantly researching and valuing companies, rebalancing your existing portfolio in line with an evolving market, and ensuring you have the right balance of diversification, risk, growth and dividend potential, while dodging those dreaded fees.
A diversified ETF is already doing all of these things by default. The market is much better than you and we are at getting this right, and owning a bunch of diversified ETFs is a much better way to access the world market.
Number 5. Instant diversification. A good ETF gives you massive diversification instantly. The FTSE 250 ETFs, for example, invest in 250 UK companies, all of whom are in the index in the first place by rights of being successful companies. Imagine buying that many individual stocks and the burden it would put on you trying to track and manage that many investments. Achieving this level of diversification outside of a free trading app would also cripple you with the number of fees involved just by the ETF.
Number 6, invest in hard to access markets. Want to invest in Brazilian companies? You'll struggle to find many on free trading apps. And think of the research involved in finding a representative group of companies that embody the country. Just buy the iShares MSCI Brazil US Dollar ETF on the Trading 212 app, which is traded on the London Stock Exchange. Perfect for UK investors. Instant access to the Brazilian market with just one click.
Number 7. Invest in foreign countries via the London Stock Exchange. Just like the Brazil example, you can buy ETFs that track foreign markets in pound sterling right here in our very own stock exchange in London. This avoids foreign exchange costs, but not foreign currency risks, and removes many of the complications involved in accessing foreign stock exchanges. If the UK stock market is offering you the products that mirror a foreign market that you are interested in, just buy the ETF here in the UK and reap the same rewards.
Number 8, less volatile. A stock index can go up and down quite a lot, but nowhere near the volatility of individual companies' share prices. Within a market, some companies will go bust and others will double overnight perhaps, and in response, the overall market will move a little. Volatility can create a huge opportunity for seasoned investors, but for most investors, it's just an uncontrollable risk.
Number 9. Long-term certainty. While no portfolio is sure to succeed, one composed mostly of ETFs is far more likely over the long term to have held and grown its value. A portfolio built on several hand-picked shares could triple in value, or it could collapse completely. You just don't know.
Why stocks are still cool. We don't want you to think that we are anti-stocks. We hold many stocks in our portfolios, but only in companies that we are interested in. We just hold more ETFs. There are still some great reasons to hold on to some stocks.
Number 1. Overnight success. You are far more likely to become rich overnight investing in stocks than in ETFs, due to the volatility of stocks. If you invest lots of your pot into a small number of companies, sacrificing diversification, then some of them might hit the big time and make you very wealthy. We saw this with Bitcoin, making people millionaires overnight. Not a share, but a similar theory that by sacrificing diversification, it can lead to huge gains.
Number 2, stocks are sexier. They just are, okay?
Number 3, more hands-on. You get to cut the crap out of your portfolio. The FTSE 250 has some great companies, and some duds. You might just want to focus on the companies that are going to be, in your opinion, the top performers. But then again, can you really predict which companies these will be?
Number 4, over-diversification can lead to mediocrity. If you invest in everything, then you will get an average return. You can't beat the market when you've bought the market. But you could limit your diversification by buying ETFs in specific developing countries or market sectors like technology or commodities like gold. If you want to focus your investments on a few interesting parts of the economy, then you can narrow down your investments to those specific areas.
We invest in ETFs because we cannot pretend to be able to predict the future. We base the core of our stock market portfolios on strong core market growth, on the theory that the world's markets are constantly evolving and developing and getting more prosperous as the years go by. We supplement our portfolios with interesting shares due to the extra opportunities that shares bring. We're confident that our strategy will continue to pay off, and we're sure it will work for you too.
Question of the day. What ETFs do you own? Do you have a favourite that you think that we should be using? Let us know in the comment section.
Thanks for watching! On this channel we talk all about personal finance, investing and all things money, so be sure to hit the subscribe button below for more great content.
This is moneyandchaco.com. See you next time.